Welcome back, folks, to Investor Diaries. A few weeks back, we had done a video on meme stocks and the impact it has on the stock market currently. One of the other meme names is the mobile gaming company called Skillz, ticker symbol SKLZ. And today, we will discuss all about the stock and the company and whether Skillz earns your hard-earned money or not.
Skillz has ridden the meme stock roller coaster throughout 2021 as the number of shares shorted rose to nearly 61 million at the end of August. Now, this 61 million shares represents 15% of the total outstanding shares of Skillz. The stock price went as low as $7.97 in October from a high of 46.3 earlier in February 2021.
Skillz stands out from traditional video game companies such as Activision Blizzard because of its business model. Rather than shoulder the burden of building video games, Skillz has created a marketplace where game developers and players come together.
Skillz further differentiates itself by creating a platform for competitive gameplay. Players pay a fee to participate in this platform and they receive cash prizes as a result of doing well. So what are the catalysts driving in favor of the company? Skillz possesses a lot of opportunities to grow further. 90% of its revenue comes from within North America, which means that there is a lot of opportunity today for international expansion.
Next catalyst is the NFL partnership. Skillz has also entered into a multi-year agreement to partner with NFL this year to further capitalize on the hot eSports market. No financial details regarding the partnership has been disclosed, but considering the popularity of Madden NFL video games, the opportunity to create an NFL-inspired mobile game could yield significant results for Skillz.
Mobile gaming focus. The company's focus on mobile gaming is a strong point. This segment of the video game industry is forecasted to increase at 10% compounded annual growth rate through 2025. The global revenues are expected to increase to $162.4 billion from $110.6 billion this year.
Next is the Cathie Wood effect. As we all know, the famed investor Cathie Wood has been investing a lot in Skillz. According to the ARK Funds website, which gives rolling updates of Cathie Wood's buys and sells, over the last few days, ARK Innovation Index, which is their flagship fund ARKK, has bought more than 1.4 million shares of Skillz after playing possum for 5 days.
Yeah, you're right. So Cathie Wood has recently been taking a lot of advantage of this sell-off scoop. She's been loading a lot of Skillz stocks because she sees a massive upside potential in this company.
That's right. I think she senses an opportunity with the recent dip and she's buying. Next is a strong balance sheet that Skillz possesses. As per the Q3 results that came out in early November, revenue was $102 million in the third quarter, up over 70% over prior period. This was driven by 47% growth in paying monthly active users over the prior year.
Gross profit was $94.4 million in the third quarter of 2021, which was up 66% over the prior year period.
Net income was $50.8 million in the third quarter of 2021, compared with negative $42.9 million over the prior year period.
At the end of third quarter, the company did not have any debt and it had a $540.3 million cash on its balance sheet. Now let's talk about some of the risks and challenges associated with Skillz.
The primary concern is the company's spend on sales and marketing, although it is expected to decline over time. Skillz acquired Arki, an advertising platform, in Q2 with the intent to move a portion of marketing spend to that platform. Arki will also serve as a revenue source for Skillz by authorizing the company to sell advertising through the platform.
So Skillz has a very interesting problem, Nidish. If I look at the monthly active users or MAUs, it's fluctuated. There have been quarters in which the monthly active users have increased, whereas there have been quarters in which it decreased. So as an example, Nidish, in Q2, the monthly active users actually decreased from 2.6 million to 2.4 million. But if I look at the results that were announced just recently in the first week of November, the monthly active users again increased. For Skillz, this is as much a challenge, a risk, as well as an opportunity to keep growing its monthly active users over a period of time.
That's exactly right. The fluctuation of the monthly active users is one of the concerns that investors have, because investors, as we all know, would like to see a steady growth rate and not growth going up in a quarter and then coming down in another quarter. Another concern the investors have is over profitability. Investors are mainly worried about the widening EBITDA losses, as most of the incurred losses in Q2 were due to the money invested in marketing to get that high revenue growth.
During the Citi 2021 Global Technology Virtual Conference, the CEO Andrew Paradise said that Skillz has a gross margin of as high as 95%. He went on to say that the company can be profitable today if it were to take foot off the gas and stop looking at customer acquisition.
The company, however, is making a conscious decision to invest and grow as fast as possible in order to penetrate what the company often cites as a massive $2.8 billion mobile esports game market.
The CEO Andrew Paradise has said on several occasions that Skillz is already at that level in which it is able to have a better than industry average payback on acquiring customers. Currently, the mobile gaming industry has an average payback of around 18 months on acquiring customers, and Paradise claims that Skillz is doing substantially better than this average.
In addition, the Skillz CEO mentioned that Q2 2021 adjusted EBITDA margin before user acquisition was around 17%, and reiterated that longer-term margin profile of the company is targeted to be an adjusted EBITDA of about 30%. The CEO believes that EBITDA target margin will be achieved through both increased scale, which will also increase efficiencies by increasing the take rate.
The company believes that over the short period of time, it will continue to be in investment mode. It will continue its focus on acquiring more customers and wouldn't look at its profitability as yet. It believes that it's on the right track, and if it continues its focus into investments, it will achieve long-term profitability.
Another key risk is Skillz' ability to hire and retain employees that are required for the company to outperform. Skillz is growing rapidly, and the hiring standards at the company are incredibly high. Like many tech startups that are struggling to reach scale, the work can be hard, the compensation can be low for new hires, and there can be often poor work-life balance combined with long hours. Often, any workers that do choose to leave are very hard to replace because there is a shortage of talented tech workers, which we all know about. And this shortage is especially severe in the areas of software development, machine learning engineers, big data experts, and other technology professionals. The Skillz CEO has mentioned these concerns several times in the conference calls.
A quick glance at the company's Glassdoor page also reveals that there are several criticisms by the company's employees.
If you're looking at what analysts are talking about the stock, the high forecast is $25 and the low forecast is $15. The average price target represents approximate 70% increase from its current price of $11 and change.
Skillz stock currently has been beaten down to a relatively low valuation considering the company's revenue growth and gross margins. Skillz currently has a price to sales ratio of 11.05, which is a one-year low. Investors are obviously focused on the risk side of the equation rather than on the upside of Skillz. Alright, so what is the Investor Diaries recommendation here? We think that Skillz stock is trading at a discount and it is the right time to buy Skillz stocks. But remember, there is a risk in buying Skillz stocks. So this is not going to keep going up every single day.
That's right, Appy. The stock has currently reached a valuation where the possible reward more than compensates for the risk that the investors would be willing to take on. However, like Appy mentioned, the ride's going to be bumpy and it might be a volatile ride. So we recommend that you limit your purse size to about 2% of your overall portfolio. That should be the max you should be willing to invest. And this is again for aggressive investors. That's a wrap for today, folks. Hope you enjoyed this video and let us know in our comment section what are the other stocks that you would like us to review. Until next time, stay tuned, stay focused, and please continue to like and share this video.
Thank you.
Thanks, everyone.